How's it going, Forex Traders? Yours truly, Desmond Sama, and I'm back on your screen. I'm back on the chat yet again. Guys, it has been a very good start to the year so far. I've had like series of very quality trades, and you guys have seen it here. I've documented the entire process, and I'm back on your screen yet again, to show you guys what I'm going to let you guys know what I'm actually looking at next, and then update you guys on the recent trades that we're actually been placing. All right, so the first pair on the list now is the S&P 500. Now, if you've been around long enough, you may have heard me call or seen me call S&P 500 to 6,500 basis points. Yeah, that was my initial target, and that's still my target. On the monthly time frame, we're making series of higher highs and higher lows. So this is a low, this is a high, this is a higher low from this low here, and then this is a higher high. So technically speaking, as far as the monthly time frame is concerned, this market is actually very, very bullish, and our business now is to find a way to actually, find a way to actually, place some trades that are in line with the overall trend. The characteristic of an uptrend is that the market has to continue giving you a series of higher highs and higher lows. All right, that is to say, this is a low here, this is a high. There must be a higher low from this point here. All right, so this is a higher low from this point, and then this is a higher high. So now, technically speaking, we are due for a higher low from here. That's why you see the market has had, it has spent 1, 2, 3, 4 months, all right, just playing around the 6,200 basis point level, and it's looking like it wants to actually come in for that higher low somewhere around here, like so. All right, so we have actually established the monthly time frame direction and then the narrative. So we scale down to the weekly time frame. Scaling down to the weekly time frame, we can actually better adjust these levels carefully, and then we can see the levels that we actually need to be working with here. So this, as you can see, we have the inner trend, which is obviously still bullish, but then the weekly time frame has come here to give us a double top. Now, if you're in a trade and for some reason you see now this this actually confirms what I said earlier on, where I said that the market would be in an option if it continues to give you a series of higher highs and higher lows. Now we put in a low here. This is a higher low from here. Then this is a higher low. Technically speaking, we ought to come in for at least an so now in this case, we'll put in a low here. All right. So this is a high, higher low, higher high, higher low. Technically speaking, for this market to continue higher, we ought to come in for a higher high around somewhere like here. So technically speaking, for this guy to continue higher, we need to come in to put in. So technically speaking, for this guy to continue higher, we ought to have put in a higher high from there. However, the market is capped at this point here. So anytime you see the market fail to give you a higher high and then comes to give you an equal high, like so, this is an equal high. These two highs are of the same height. This is a double top. And considering the time frame that this formation is actually taking place, this is a weekly time frame, guys. This is major, all right. So anytime you see this chart pattern form on the weekly time frame, best believe it has some authenticity to it. However, the only criteria left for this chart pattern to fulfill is that it has to break out of this neckline. So the neckline is the lowest point of the range. All right, so this is the lowest point of the range or the highest point, depending on what the trend is like. So this is double top here. So this would only be valid if we do see a decent break below 5,000. Sorry. So this chart pattern will only be valid if we do see a decent convincing break below 5,800 basis points. Provided that this will only be valid if we see the market break below 5,800 basis points, provided this guy stays in this range. This chart pattern is not as complete. All right, it's not yet complete, but if you look closely, you can see the double top formation here. So we have a double top and a double top. All right, so this is one leg up, one leg down, one leg up, and even at the right hand side of things, we have a double top. All right, so but the only thing holding this guy back is that we need to see a neckline break. Once you see that break out of this range below 5,800, once you see that bridge of this level here with a bearish engulfing candlestick pattern, then once you see a bridge of this 5,800 basis points with a bearish engulfing candlestick, then we are in business. On weekly time frame, we are in business, because now once we are able to clear off this base here, this exposes this 5,200 region somewhere around here. So this is exactly where we want to see the market deep into. So as far as S&P 500 is concerned, this is still playing around no man's land, because this could go either ways. If we actually break out of this range to the upside, then we could actually continue higher to my prime target, initial target, which was around 6,500 basis points, which was around 6,500 basis points. Now I called this S&P to 6,500 basis points long before JP Morgan came to release his own forecast. All right, but as this guy stands here, I am not doing anything on this pair until the market commits to a certain direction. So it's either breaks above here, then heads higher, or breaks below here to continue lower. In any case, I am very, very bullish in any case, I'm very, very bullish on S&P 500. I am only taking trades that align with the overall trend. Okay, as far as the S&P is concerned, I'm not saying that you cannot take sell trades. I'm saying that the easiest and the most profitable ones tend to be the ones that go with the overall trend. Alright, so in this case, yeah, I'm waiting patiently to see what happens. If we breach 5,800 basis points, I'm definitely going long on if we breach 5,800 basis point and then we fall into some demand level somewhere around here, or maybe coming for that third touch of the trend line. Because if you look closely, if you count a touch, so this is the first touch, second touch, so the market is looking like it is thirsty for that third touch of the trend line. So if it dips lower to this point here, best believe you are blowing all the way out straight back to 6,500 basis point, like I said earlier, and even beyond. All right, so that's just that for S&P. I see no reasons as to why you would want to take a trade in this range. There is no clear direction yet. This guy is boxed up, so you just box it up nicely. I like commits to either the upside or the downside. Then we can actually go ahead to execute this guy. But so what we need to see on S&P 500 is very, very simple. I'll have the market commit to a certain direction. In this case, it is not committing to any direction. Best believe it is just moving sideways. We only have business with S&P if it breaks out of this range. Once you see this guy break out of this range, then we are in business, and I'll be back on your screen. That's why you must do yourself a favor and click on the subscribe button and turn on the bell icon as well, so that when I drop a video, you'll be among the very first few. Just as you've seen this one, you'll be earlier, or you'll be earlier than this, and you see it right on time, so you know exactly how to better prepare yourself, and then prime yourself proper, so that when the market is ready, you know exactly what to do and what not to do. All right, traders. So moving on now, we have the NASDAQ 100. So as far as NASDAQ is concerned, we are actually still very bullish on this guy. The overall trend is bullish, yes. As far as NASDAQ is concerned, by the way, this is showing US 100 here. It is still the exact same NASDAQ. Yours might be showing US Tech, alright. It is still NASDAQ. Yours can actually be showing NASDAQ. At the end of the day, you're trading NASDAQ, guys, so not be confused. So this is a low here, this is a higher low, this is a higher here. So we need to see the market coming for that higher low somewhere around here, like so. Say, all right, so the exact same market sentiment for S&P 500 is what the Nasdaq is actually starting to experience. So we've actually pinned into 22,000 basis points, and for some reason we've had like a very difficult time breaking above there. Now this is multi-time frame, by the way, and like I said earlier, you need to actually know what the candlestick pattern for the previous month has been like. So in this case, for the month of February, we've not had any bullish move. In fact, it has been bearish. All right, so this is selling pressure here. All right, so anytime we see a pin bar, like so, this is a selling pressure, because now this will now let you know what the subsequent months will be like. So we have failed to close bullish engulfing for this month, so best believe we could actually be seeing the market melt down into 17,000 basis points. I was highlighting Nasdaq to 27,000 basis points earlier on, but you know how the market goes. The market will always move in waves. All right, so there are some technical criteria that the market has to fulfill that would not necessarily negate your overall sentiment, but it will just pull back for medium term adjustments, and then you can actually continue in the overall direction. So this is still in an uptrend. As you can see, monthly time frame paints the overall narrative. So if the monthly time frame is bullish and the weekly time frame is bullish, it will be very dicey for you to actually start looking for trades in the opposite direction. I'm not saying you cannot go against the trend in certain cases. I'm just saying that there are certain things you must do that with understanding. All right, you must do that with understanding. You must know what the market is trying to do per time, per season, before you actually go ahead to go against the trend. All right, so going against the trend does not mean that you are going against the overall multi-time frame. You just want to capitalize on the short-term move. All right, so best believe for Nasdaq, we would actually be pulling deeper. If this level holds, we could actually be pulling deeper into 17,000 basis points, somewhere around there, like so. So scaling down to the weekly time frame, this is exactly how things look. We have actually again coming to cap at 22,000 rather basis points. That double top pattern nicely. It's that same thing that formed on S&P 500. So what we need to see is very simple. Allow the market break below this base here. All right, so let it break below this base. So a break below the current basis point, which is 20,842.3, would actually expose regions of about 18k to 17k. Right, so what would actually spike my interest on Nasdaq is that we would see a breach below this. So once we see that breach below that, then we can definitely be rest assured that this pair is actually going to continue higher, because it will first of all retest this point and then continue higher. But let me see what happens here. I think we have some trend line plays here. Right? So the only thing keeping this guy from collapsing are actually two things here. So you have this upward inner trend line somewhere around here that has actually guided this trade all the way through, and then we have this base of this neckline here, which is a double top. So in event that we actually successfully break below this base here at this trend line, this will obviously actually expose the market to regions of about 17,000 basis points and then 18k. So you don't need to worry about anything. Do not panic. As far as you are my subscriber, you are definitely catching this move. Alright, so that's why I urge you to go ahead and subscribe to the channel and turn on the bell icon as well. And then yeah, so that's that for NASDAQ. Always be on the lookout for my videos. Alright, so that's just that for NASDAQ. Nothing much, nothing serious on NASDAQ. With this, I don't really need to go down to the daily time frame and look at anything. As far as this video time frame has put us in a range, then we are actually waiting for this market to actually land up nicely before actually continue to the upside. Yeah. So, but as far as NASDAQ is concerned, we are in a range. I see no reason as to why you should try and force trades. Allow the market coming to, so allow the market coming to a certain direction. Either it goes higher or it comes lower. In any case, here we're actually looking to gun this trade all the way to 22,000. I think somewhere around 27,000 basis point, which was my prime target if you've been around before for a while. We're calling NASDAQ all the way to 27,000 basis point. Ideally, that is where we're actually going to go to, right? But first, the market has to come back and give us that pullback. For those of you guys that missed the earlier entry somewhere around here, like so, or even inside of here, this is your second chance, all right? So, should the market break below this 20,842 and then this trend line, this will be your second chance to actually go higher. Or in the event that we actually break above 22,151 region, which is the height of this will still be another chance for you to go in and then hold on to your trades until we milk this bear to the absolute best and grab every single pip it has to offer. All right, so that's just that for NASDAQ. Okay, so guys, moving on, we have the US 30. We are just going to do a quick top-down analysis on this pair. So as it stands, we've put in this head and shoulders, inverse head and shoulders pattern somewhere around here, which is the head, shoulder neckline was broken and then retested nicely for the first retest. So as things stand, like I said earlier, the market is just ranging across the indices, so you need not stress yourself so much. So let's just see how things look. Already we've seen the first touch and second touch of the trend line, and I respect this trend line very well. I respect it because I've seen this is coming from the monthly time, from the weekly time. This is not your 4-hour time frame, trend line. This is significant. All right, in the markets we have horizontal levels and we have diagonal levels. So the diagonal levels are these trend lines that you must always respect. So the overall trend is still bullish nonetheless. We'll put in a low, put in a high, higher low, higher high. So technically speaking, we ought to come for the higher low somewhere around here like so. So double top again across S&P, across NASDAQ, and then across S&P, US 30, and NASDAQ. We've seen this chart pattern form on the weekly time frame. So best believe the only thing that would actually enable this guy be valid is to actually break below this neckline right around 41,800 basis points. Once we can clear this bottom here, this is the neckline of this chart pattern. So we still have to see this guy deep lower and then clear. Once you can clear this base, we have space all the way to at least $39,000, at least 39,000 basis points as far as US 30 is concerned. Now we've had like some reactions already, so this was the inner trend line as well. They must also pay attention to. So these things matter, guys. Like I said, I teach you guys my thought process. I come on here, I document my thought process. I teach you guys, I journal my trades. This is me also journaling my trades, so you must learn how to actually walk through how I think as well, how I look at the market. I leave no stone, I leave nothing to chance, guys. You cannot afford to lose anything to chance in these markets, believe me. US 30, so I've been calling US 30 to 47,000 basis points. However, we've come here to cap. Like I said, this is a low, this is a high. Okay, this is a higher low, higher high, yeah, higher low. So the market has failed to give us that higher high, hereby negating this uptrend. So as far as US 30 has capped at this point, yeah, best believe me, the market would most likely be dipping into 38,000 basis points. However, we have two hurdles to cloud. Once we are able to cloud this trend line and then this base here, then we'll actually see this guy collapse even to 38,000 basis points. That's just that for US 30. I see no reason as to why you should actually be confused. If you're confused, come back and watch this again. That's why this is on the internet for you to see. It's not something you watch once and leave. You must watch it over and over. So you see, I have contingency plans in place for what ifs. The market does not surprise me. Do you understand? I refuse to be caught unawares. You must approach the market as a soldier. You are always at alert. So the market has to come into my zone and then I snipe. So provided these two hurdles are cleared, this trend line and then this base, both of them cleared, I'm here to go long. I'm here to buy US 30. I want to see this guy reach for the 1,832 region somewhere around here. Once it reaches that level here, we have space to 38k. All right, so from here it's ballistic all the way to 47,000 basis point, provided that this level also holds. All right, so that's just that for US 30. By the way, I urge you to go ahead and leave a like and comment and subscribe to the channel as you watch as well. All right, so moving on, we have the pound dollar. I was telling you guys that this market was not ready earlier on, and you guys did not believe me. And the market has just been moving in a very funny way. Like I said to you guys earlier, the market is not ready. It's not ready. You cannot force the market. To, do you understand? Your activities cannot force the market to move in a direction that it is not ready to move. That's just the honest truth. So your best bet is to be patient with the market. Allow the market finish whatever it is that it has to do, and then it will let you know that okay, fine, yeah, it is actually ready to actually start moving in the overall direction. All right. So I'm just gonna go ahead to pull out some trend lines. Let's see what um, pound sterling is doing really from the monthly time frame. Let's see this guy. So you see, actually I was down trying to see. So like I said, the market was not ready, man. Like you need to, guys. So let's see what the pound sterling is doing on the monthly time frame perspective. Let's try and connect these dots here. So this is let's try and connect this trend line. You see, so I see. This is very, very tricky. This is a tricky one yet. Alright, so on the monthly time frame we had like the first touch, second touch, third touch happening somewhere around here. First of all, I had this fake out, and you guys know that after a fake out comes a move in the opposite direction exponentially, and that's exactly what happened. So as it stands here, the market is currently testing this trend line. So let's get this out of the way. You don't want it looking very confusing. So firstly, we have the overall trend in your favor. We are I'm still looking at the pound sterling closely. I'm still looking at this guy closely. We have some supply level somewhere around here to play with. We've seen the pound sterling pull into supply level somewhere around 1.25794. So what we need to see is a reaction off of there. So already the market has actually reacted, but we need something a bit more convincing, because once you scale down to the daily time frame, this is exactly how things look on the daily time frame. We need something a lot more convincing than what this guy is doing. And like I said, remember we have this trend line following this guy to the upside. All right, so pushing this guy, always pushing this guy all the way back. So ideally, I would advise you to wait for a break of this counter trend line. So once you are able to negate this, so once you're able to bridge this counter trend line here, then this guy is rolling all the way down to this point here. So let me show you guys something real quick. So this is exactly how it looks. Okay, this is exactly how it looks. So a break out of this trend line here would actually melt this guy all the way down. But provided this trend line is in place, believe me, this guy is a tricky one. And you guys know me by now. I like to take the most obvious trades possible, the most obvious trades. All right. A chart has to look at my chart and say, okay, fine, this guy is going down. Believe me, already this is a downtrend, but I need to see one more criteria, one more condition clear out here. I need to see this guy clear out this place. I believe this move could easily be a higher low from here and then continue higher. Do you understand? So, like I said, as far as this trend line is in place, I have no business shorting the pound sterling. I'll actually wait patiently to see what this guy does here. Once we clear out this trend line here, then we are good to go. All right. So if you're looking at shorting the pound dollar, be careful, be patient. Allow the market fulfill every single criteria needed in the books. Once we are able to fulfill and hit every single condition and clear out every hurdle, this will be a free fall, a free easy fall all the way to 1.21000, which is this blue bar somewhere around here. All right, so that is that for the pound dollar. I don't see anything confusing so far, but provided this channel is in place, you see, as far as this trend line held, let me show you guys something real quick. As far as this trend line held, yeah, first touch was somewhere around here, second touch, third touch here. As far as this trend line held, everybody assumed that the pound sterling was actually going to go up to at least 1.4, which is all the way at this blue bar here. But the moment this trend line got breached, then the market started to melt. So the exact same thing is going to happen here. As far as this trend line is in place, best believe this market could easily be going higher. All right. So because you must be very attentive to this market. All right. So like I said, me, I have conditions I always watch out for. I allow the market fulfill every single criteria I have in the books. Then I can be confident to short this guy. But I execute my trades with confidence based on the criteria and the conditions that I have set for the market to actually meet. And if the market does not meet those conditions, I have no business shorting that pair. No matter what happens, even if it drops, as far as there are certain criteria that you must fulfill for me to actually be comfortable trading that pair. All right, because like I said earlier, I leave absolutely nothing to chance. You cannot leave anything to chance in this market, believe me. All right, so that's that for the pound dollar. Very, very simple. A cloud of this trend here, which is a meltdown all the way to 1.2. So back to the yen pairs, back to the dollar yen. In the last video, I spoke to you guys about this pair, and I made mention of the fact that 149 will be a deciding factor for this market. I spoke to you guys. I said that 149 will be the deciding factor for our yen plays as far as the USDJPY is concerned. And in this case here, the market has held nicely at the 149. Obviously, I was expecting this to happen. That's why I locked in my trades, and that's why I came on here to let you guys know what I'm, because these levels are very solid. Now, these levels are on the monthly time frame. On the weekly time frame, they are very, very strong. Yeah. So, and one thing about the market is that if a level has reversed price in the past, you most likely do the exact same thing in the future, because the past always tends to predict the future as far as this foreign exchange market is concerned. The stance here for the dollar yen here is very, very simple. We still need to see the market break below 149. But as far as the dollar yen is concerned, we need to see the market break below 149, and then once we are able to breach 149, we would definitely be melting all the way to 140. Believe me, but this is still a lower high from here. So anytime you see a lower high from here, best believe there is a problem. On the weekly time frame, there is a problem. All right. Now scaling down to the daily time frame, what do we do? Allow the market take a break, let it rest somewhere around here. We would definitely be shorting this guy. Yeah, in fact, I'm actually still holding on to my trades. I've closed out some trades in profit. Then the ones that are actually open are moving the break even as we speak. So all those other positions are actually on break even. So we need to see the market actually breach 149. Once we break below 149, then I'll be here to bank in some extra trades on this guy. But as far as things stand, I am not adding any positions until I see the market break below 149. All right. So that's just the honest truth. But USDJPY, let me see what's going on with USDJPY on the 4 hour time frame. All right. So this is what the 4 hour time frame looks like for USDJPY. This is the only, so these are the only pairs that I'm actually scaling down this much for, because I feel they have potentials. Now, so on the 4 hour time frame, we had like, this is first touch, second touch, third touch. So far this trend line is getting respected. So like I said, the only thing that would actually negate this entire bearish move here would be that this trend line is actually out of the way. Once it's out of the way and then this levels is clear, then best believe every single bearish play would have to be reanalyzed. All right, so we need to strategize and look at this pairs closely. One, in the event that we actually break above this trend line and then clear out this cap here, then I will have to come back here and then let you guys know how we can actually reposition ourselves nicely in order to make a lot more money on the way to the upside. So overall, I'm favoring the USDJPY to the downside to the tune of 60%, and I'm leaving that 40% because we've actually hit a very solid level. So this guy could easily be continuing higher from here. But like I said earlier, all trades are locked in. TP1 was hit, TP2 was hit. All trades are locked in, and they were actually waiting on this guy to see the next call of action on this pair. Right? So that's just that for USDJPY. So believe me, what USDJPY does will actually decide what the rest of the yen pairs do. So you need to be very attentive to this pair. All right, pay close attention to this guy very, very closely. Although I see some decent entry level somewhere around here, so I'll let the market pull back nicely, let it come, and let's see how the market reacts to this trend line at around this point here. If we breach this level here, then we're actually headed higher, because I can see some levels that we can actually play with somewhere around here, like so. I can see some very beautiful levels that we can actually go short from. That's just that for this pair. It's very, very simple. I can see some supply level somewhere around here. I'll let the market come in and test nicely at that supply level. Then we can actually decide if we actually want to go ahead and short this guy, or depending on what the market does here. Again, depending on the patterns we see somewhere around here. If we see a decent, very, very beautiful, maybe engulfing pattern or whatever entry criteria that we have that the market fulfills, then we can actually go ahead to short this guy, add some more positions, and then hopefully the market breaks below 149. But I would advise you to chill. Wait for the market to break 149. All right. Also Cardian now, guys. We hit TP1 and TP2 for Cardian, guys. Amazing trade so far. So we banked around we had entries around 108. TP was at 103. So this was 108, 103, 108, 103. This was about 484 pips. All right. So this was 484 pips we caught all the way from here. All right. So entries were somewhere around here. I spoke about it in my previous episode. All right. So by the way, if you want to see a very detailed analysis of the card yen, I urge you to go ahead and check my most recent video, the one before this one. That's where I actually broke down this pairs in detail. So as things stand here, remember we have the weekly time frame headed to this pattern, which looks very, very, very good. And long story short, what we need to see is market needs to go and break this neckline. So where our TP2 was the neckline 103 region, somewhere around here. So what we need to see the market do is break below 103. Once you see a decent break below 103, I'm back on your screen, guys. All right. So as things stand, this is exactly what's happening in the market as things stand here. We had this head and shoulders pattern. This is a double top pattern here, and quick. So long story short, let's see how we can capitalize on the next move. So what do I think is going to happen next on Cardian? It's very simple, yeah. This is a high. So this is a high, low, lower high, lower low, lower high, lower low. So the market has coming for a lower high somewhere around here, like so. So by the way, we had entry somewhere around 108. We actually melted all the way to 103, which was around 484 pips. That we banked on one single move, and I still have my trades. I have some of my All right, so entries were somewhere around 108, and they were actually melted this guy all the way back down to 103. TP1 was somewhere around here, which was always the recent low, and then TP2 was 103. I will just done the justice to that. Now the market has to pull back because now we hit a very solid base. All right, so what is next for the Cardian? It's very simple. We had a double top here. This was where the neckline is somewhere around here. So you need to see the market pull back into that neckline patiently. So just be patient. All right, so we need to see the market pull into this neckline like so. So once you see a decent pullback into the neckline, then this will actually let you know what one. All right. So what's next for Cardian? We need to see market pull into 106 region. So once you see a decent pullback into 106, which is the neckline of this double top around here, so that is exactly when we will actually be poised to go short again, add some more positions to this guy. So right about now, what we need to see the market do is pull back into 106, allow the market breathe. I still have my positions open somewhere around here, locked in break even. I locked out I closed out some trades, and I left some running on break even. So I have absolutely no risk in this market whatsoever. So I need to see the market pull into 106. Guys, I'm holding on to my trades. I have no iota of that whatsoever. I am gunning for the absolute best that this market has to offer. Remember, our prime target is at 95. That is, once this market breaks this 103 500 region, we should see this guy dip all the way to 90, 95, 96 region somewhere around. At least this blue bar. If we can break below 103, all well and good. If we can pull into 106, perfect. All right. So, but in any case, I'm still very keen on my trades. I'm still very keen on my targets. I'll let the market prove me wrong. All right. So provided we stay below this green bar here, I'm still very short on this pair. I'll only be worried if I see the market break above 106. All right, so do not panic. I'm still in this trade. I'm still holding on to my positions. All right, guys. So onto gold. We have gold as actually putting a weekly bearish engulfing candlestick finally. So this is actually looking like the market is starting to pull back nicely all the way down here. Now, if you've been around long enough, you may have heard me call gold to $3,000 per ounce. And yep, we actually got very close to hitting $3,000 per ounce. We actually did get to 2,958, just a few more pips away from hitting, $3,000 per ounce, which was my prime target. And the market just came in to put in a bearish engulfing weekly time frame candlestick here. So now, scaling down to the daily time frame, what should we expect for gold? I actually expect some more downside on gold, at least to 2,760. So this is like the breakout of this range here. So the market was in a range initially. All right, so somewhere around here, like so the market was in a range initially, so we just broke out of that range. So we need to see the market deep into at least 2,720 dollars per ounce here. Then from here we'll actually blow through all the way to $3,000 per ounce, provided this level holds. If this trend line and then this yellow bar holds, then we'll definitely see this level reverse. So provided this level holds, so if you see 2,720 hold nicely, then we are definitely reversing this guy all the way to $3,000 per ounce. But in the event that it gets broken, it will actually expose 2,260 region somewhere around here, like so. So that's just that for gold. Gold, nothing much, nothing happening at the moment. Allow the market finish whatever it is doing. Allow it pull back nicely, and then we can actually know what to do with this pair. But as far as this guy remains in fin, nothing much, nothing very enticing. I'm waiting for this guy at this $2,720 per ounce. Once I see that pullback, then we are actually ready to go.